What if the real explosion in silver hasn't even started yet? What if everything you're seeing on the surface, the small rallies, the pullbacks, the headlines about inflation and rate cuts, is just noise, while something much deeper is forming underneath? This is not just about price. This is about price discovery. And price discovery in silver is not a retail story. It's a structural story. It's a system-level shift. And once it begins in full force, it doesn't move slowly. It reprices violently. For decades, silver has lived in the shadow of gold. When investors talk about safe haven assets, they mention gold first. When central banks accumulate reserves, they buy gold. But silver has always been different. Silver is both monetary metal and industrial metal. It sits at the intersection of finance and technology. And that dual identity is exactly why its price discovery phase could be explosive. Right now, global macro conditions are unstable. Sovereign debt levels are at historic highs. Currency debasement is no longer a theory, it's policy. Central banks expanded balance sheets massively after the 2008 crisis. Then again after 2020, the liquidity injected into the system didn't disappear. It changed form. It flowed into assets, into equities, into real estate. But hard assets, especially precious metals, remain structurally undervalued compared to monetary expansion. Silver, in particular, has been suppressed by paper markets. Futures, contracts, derivatives, leveraged trading. These mechanisms create synthetic supply. On paper, silver looks abundant, but physical silver is another story. Industrial demand is rising sharply. Solar panels require silver. Electric vehicles require silver. Advanced electronics, semiconductors, AI hardware infrastructure. All of it depends on silver's conductivity. The world is entering an electrification era. Energy transition is not just a climate narrative. It is a geopolitical competition. The United States, China, and Europe are racing to dominate clean energy manufacturing. Solar capacity installations are breaking records, and silver is a core input. Unlike gold, which is largely hoarded, silver gets consumed. It is used, embedded, and often not economically recycled. That creates long-term structural supply tightness. Now here's where price discovery becomes critical. Price discovery happens when the real physical demand overwhelms the artificial paper pricing mechanism. When futures contracts can no longer suppress spot price because action metal becomes scarce. When delivery risk increases. When inventories shrink. That's when markets shift from controlled pricing to chaotic repricing. Historically, silver is volatile. But volatility is not randomness. It's compression followed by release. In previous cycles, silver lagged gold and then suddenly outperformed it in dramatic fashion. When momentum builds, it feeds on itself. Retail enters late, institutions reposition, short positions get squeezed, and the move accelerates. But this time, the backdrop is different. The global order is fragmenting, trade routes are shifting, sanctions are weaponized. The dollar system is being questioned in parts of the world. BRICS nations are discussing alternative settlement systems. Central banks are diversifying reserves. Gold has already responded to this trend. Silver has not yet fully priced it in. The gold-to-silver ratio remains historically elevated compared to long-term averages. That ratio compresses during monetary stress cycles. If gold continues strengthening due to central bank demand and geopolitical risk, silver historically catches up and often overshoots. That overshoot phase is where exponential moves happen. At Silent Empire News, we look beyond headlines. We look at structural positioning. Mining supply growth is limited. New, large silver discoveries are rare. Environmental regulations, permitting delays, capital constraints, all of these restrict supply expansion. Meanwhile, industrial consumption trends upward. This is the foundation of price discovery. Constrained supply meeting accelerating demand within a fragile monetary system. When that tension becomes visible to the broader market, repricing is not gradual, it is disruptive. And the most dangerous phase for those unprepared, the transition moment. The moment when silver stops trading like a commodity and starts trading like a monetary hedge again. That shift doesn't send signals weeks in advance. It often begins quietly and then breaks out violently. Right now, silver sits at a crossroads. It is compressed between macro uncertainty and industrial acceleration, between paper leverage and physical reality, between investor skepticism and structural necessity. The question is not whether silver will move. The question is when true price discovery begins and how fast the market adjusts when it does.